Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for another melt-up day in the stock market. Not getting one tonight, but it certainly was another one of these days to the upside in the stock indices. And it is Thursday, the 25th of January, 2024. So in the metal markets, the markets today looked at durable goods, GDP numbers. It was looking to see how manufacturing was going in different areas. We had a lot of reports out, new home sales. It was a day full of action. And what it did in the metals is the market started looking at this, and headwinds were disappearing from certain parts of the market. And all of a sudden, we saw that at first you're up to 416 in the 10-year notes. Then you dropped back to 41, I think it was 413. And with that, bids started coming into the gold and certainly into the silver market. Now, when you look at the gold-silver ratio, you see that the silver ratio is going completely the other way now. It's finally underneath the 18-day average as this market has gained dramatically on gold. And the reason for that is China. The market looked over the past 3-4 days and saw things that were happening where China it started out where they were doing what I call window dressing. They were going to buy stock, and they still are, from one of their regulatory bodies to shore up the stock market to give the consumer confidence. But they did the bigger and better thing. They went and they played with their bank reserve ratio, and that is fundamentally important. That's not window dressing. And when they did that, you saw the copper market come alive. You saw the silver market come alive. Right now what we're looking at is what's going to be with the foreign currency markets. They're trying to figure out what to do with this. And each break that comes in the stock market has been short-lived. I mean, as you take a look at it, you get a break and then boom, you go to the bathroom, you go out, you have coffee, you come back and whoa, the market gets rebid. This is called a melt-up. I explained it the other night, and it's exactly where you're at. It's where you are. And I was saying that the tech sector reminds me of the late 90s. It started around 95, 96, went up towards 2000, and we had everything on fire in the tech market. Many of you don't remember the name Cisco as being one of those leaders, but it was. Don't get me wrong, everything came back to roost, and you heard people licking their wounds. But during the rally, and you're in that rally phase because of AI, there were fortunes being made, and each break in the market got absorbed, and the market kept going higher and higher until it didn't. So what do you do in markets like that? You learn to rotate a little bit, but eventually you will be late to the party and you'll give something back. That is the nature of trading. That is the nature of investing. If you're thinking you can get in at the bottom and out at the top, I hope you can. I don't know anyone that does it consistently, but people do get lucky every now and then, and it happens that way as they look back on their career. So in the metals, what I'm still looking at, I want to bring you to this, is you're not cracking much under the 20,000 level in the gold. You're having difficulty getting under 2,000. I said 20, 2,000. I wish it was 20, but 2,000. And that is something that you have to look at and understand. The market does have value. We have to also look and say, listen, if China comes on board and things get better, it does impact all the world economies. We don't want China in the doldrums. This idea that people had China's going to beat the United States and be a bigger economy right away, I didn't believe it then. I don't believe it now, but it's not a race. If they did, they did. Somebody will eventually. The problem with most economies is they're not really democracies. And everything I've ever seen shows that democracies win out because you get the innovation, you get the people wanting to work because it benefits them, not the mother country, if you will. These are the ways that goes. Could I be wrong? Yeah, but history doesn't show that to be the case. So the U.S., yeah, we're the most powerful economy for the time being, economically. Beyond that, I don't want to get involved. All right. So when we take a look at the market, the gold market's in a corrective mode. I've said that. Maybe you can get down to the 18-week moving average. That number is sitting here at 1990, 290, but it's having a hard time doing that. When we look at the daily charts, don't let each day set you up right now that you think you're trending. Does this look like you're going anywhere? It isn't. The market's been in a short-term downtrend, but what I've said, it's having trouble getting underneath the 2,000 level, not 20,000, but the 2,000 level. Why? Because if you take a look at the gray line, the 200-day moving average is right in that zone. That's what's been supporting the market, along with my good friend Bollinger Bands, which are right below the market. And that's what I enjoy. Now, by the way, I've completed now my Bollinger Bands in my course. I'm now on window envelopes, so I've got about 8 chapters left, and I will have my course done. Then we'll dress it up, but February, for sure, will be the release date. So I haven't done this course, and I looked up the date. 2016 was the last time I did a full charting course. So I do them about every 7 to 8 years. And I've got a lot to offer in this course you haven't seen before, doing it different. Some will be familiar, a lot won't be familiar. And because I learned so much more in an 8-year period, I bring a lot more to the table for you. All right. I am going to keep separate, though, the enhanced Bollinger Band course and outside days. And there's a reason for it. The reason is so simple. I want you to get the basics down and then go to the advanced courses. Got that? It makes sense. I kept trying to incorporate it in this course, and I said, it doesn't work. I'm definitely going to lose the person that really wants to learn technical analysis and then take it after they get it all together, then they go to the next step in it. That's the way I'm going to teach it. All right. And I'm excited because it's been months getting this thing done. So now where we're at now is right here with resistance. The resistance is 20.3170. That's the 18-day average. If you can get up and over 20.3930 under the current formation and close over 20.3170, well, then you're out of the downtrend. Did you hear me say you're in an uptrend? I don't see anything right here to put the market in an uptrend as a chartist. Not just yet. I think it would have great trouble if it rallied up to the upper band at 20.63.5. When I look at the momentum, you're oversold. Do I think traders deploy new money in oversold markets? I do not. So I don't think you're getting a lot of new shorts coming into the market. I think they're seeing support here, resistance 18-day average. Now, for the first time, you can see that look what's happening. You've come back down. So this area where we attacked up here just recently, we didn't quite get all the way there to the 91.5 zone, but you were close. You've now run into that area where that was overdone, and now silver can stand on its own a little bit, and look at the difference in the charts. The silver's attacking the 18-day average of closes, but again, so important. I call that number the line in the sand because more times than not, if you learn to look at a chart, you see that action come together and it fights. Throw the name of the chart away. Learn to read chart action, and all of a sudden you go, I'm expecting that if you were down like that, the first area it's going to attack is there, and are there layers above it? Yeah. The next layer above it's the 100-day average at 23.5170, the 200. But to get to the 200, you got to get through an awful lot of resistance here, which is the upper Bollinger Band at 23.73 and the 100-day average, let's call it 23.52, right in that zone. So I think the downside has run its course. I don't know that the market's yet ready to run to the upside. It's got to consolidate this. In the copper market, I would have loved for it to go even closer to the upper Bollinger Band, so I could have said to you, I told you so. But that was a good run. There's some interesting things here. We want to see if it's going to hold that the red line starts getting back over the 200-day average. So the red line's the 18-day average of closes. The gray line is the 200-day. You got under, now you want to see if you can come back. Are you overbought? Yes. Would I tell a client to deploy money in an overbought market? No. Is it an uptrend? Yes. Again, you don't deploy, at least I teach you don't deploy in an overbought market. Platinum is trying again to embed. It lost it right through here. You had the market as you were down, and I'll show you this right here for yourself. You were embedded. I liked the bear side. And then on this day, I had my clients come out, knock on wood that they made a small profit. And the market lost its embedded reading. And now the market is trying its darn best to re-embed. We'll see if it can succeed with it or not. It should get very interesting. But the bears have regained control. And if they have regained control, you've opened the door up that they could still get down here. Something else bearish is happening. Are you taking a look at what's going on? The 18-day average just got under the 200. It's just happening now. So I don't see anything friendly on this chart. Back into the bear camp in it. And in the dollar index, the market fell back, found its support against the 200-day average, and it's remained embedded. So until it loses the embedded reading, which would take the red line closing under 79, that number's right now at 83.31. If that happened, then I'd say, okay, you can slip a little bit here, but where are you going? I see 102.58 is support to 102.74. The resistance, as I see, it's the upper Bollinger Band, 103.71 to 103.90. How often have you heard me mention here recently? I think 103.70 to 90, 104 area. That's your first upside target. Will it hit it? Don't know. It's interesting that price counts also have that as the first upside target. If you get price counts from us, they're unique to the Linn Group. You have to have a trading account with us in order to be able to stay on one of our subscriptions with it. But you will find it's like nothing you've seen. Once a trend sets in, it gives you a good idea as to where the market may be headed. It is not an entry tool. It is a tool as to ever wonder if you get a run, where might that market finally run out of steam to the upside or downside as it's making its move. This is exactly what that helps you with. I find it very, very interesting. I'm always amazed. I call it magic. It's quite interesting. So how do you get access if you haven't even tried that? Well, you can try it. We give 2-week access to the price count, by the way, so you can try that. But understand, it's going to be limited access. You can't buy a subscription to it. For that tool, you have to have a trading account through us. That's all that's required. But here's all the different things we have. My research, Pivot Point, the Arun indicator courses. These are free. They're included in here. Take a look at what we have through there. Plenty of papers on trading ideas, how to, if you will, use stop orders. How do you modify and play with them? Try to optimize them. How do you work with different relative strength? Am I slow stochastic? It's all in here. Plenty to go with. So how do you get this? Move your cursor to the top. That's one way. You'll see an icon. Or go to iraepstein.com. Free offers. It's right there. The education series I have, they're going to be in the word education on the top right. You'll see that too. But you get some of the education in here. So pick and choose. I'm Ira. You have yourself a great day. I'll catch up with you tomorrow.